So, what happens when the world's biggest companies all decide to bet big on one single country? Well, we're kind of finding that out right now because India is in the middle of a foreign investment boom that's just shattering all the records. It's partly driven by this global push to diversify supply chains. So let's break down the numbers and see what's really going on. Okay, let's just put the headline number right out there, $135 billion. That is the amount of foreign direct investment, or FDI, that companies have pledged to put into India just this year. And look, to be clear, this isn't just a good year. No way. This is a signal of a pretty major shift in the global economy.
All right, so the big question is why? What's really driving this massive wave of cash? Why are all these global companies suddenly so incredibly confident in India's future? We're going to unpack the entire strategy that made this happen.
And this isn't just one industry getting all the attention. The investment is literally pouring in from every corner of the global economy. We're talking tech giants, chip makers, car companies, and big energy players. It's a really comprehensive, across-the-board vote of confidence in India's economic path.
So let's get into the nitty-gritty. Who exactly are these investors, and where's all this money really coming from?
And when you break it down, it's actually pretty fascinating. The money is split almost perfectly, right down the middle. So while about $70 billion is coming from just a handful of massive tech companies, the other $65 billion, that's made up of hundreds of other proposals. And that shows you the real depth and diversity in this investment wave.
The names leading the charge are, well, exactly who you'd expect. In tech, you've got Google, Microsoft, and Amazon. But the crucial part is who's joining them. You have key manufacturing players like Apple's supplier Foxconn, the super fast-growing Vietnamese EV maker VinFast, and the energy giant Shell. It's this mix of digital and physical infrastructure that's so powerful. And this is the point I really want to drive home. Beyond those big household names, there are over 750 other investment proposals in the works. So this isn't just a top-heavy trend. It really suggests a deep, widespread interest from investors all over the world in what India has to offer. A boom like this doesn't just happen by accident. So let's jump to our next section and really look at how a decade of policy changes has laid the groundwork to make India such an attractive place for all this capital. If you had to boil down the government strategy into one phrase, this is it. The whole approach has been super proactive, really focused on systematically tearing down barriers and just making it easier for foreign companies to come in, set up shop, and get to work. Now, this wasn't some overnight change. It's really the result of a deliberate, long-term plan. The reforms basically came in two phases. The first, from 2014 to 2019, was all about raising the investment caps in some sensitive areas like defense and insurance. Then the second phase went even further and opened the doors completely, allowing 100% foreign ownership in key areas like coal mining and contract manufacturing. The whole strategy really comes down to three main things. First, just simplifying how business gets done by cutting away over 42,000 compliance rules. Second, reforming taxes, streamlining the GST, and getting rid of the so-called angel tax, which was a real headache for startup funding. And third, a massive push to boost local manufacturing with programs like Make in India and some really attractive production incentives. And guess what? These policies are actually working. They're delivering real results. It's important to remember that the $13.5 billion figure is about commitments. But this chart, this shows the money that has actually landed. In the first half of this financial year, that number was over $50 billion. That's a 16% jump from last year and a new all-time high for that period. Okay, now this next part is super important if you want to get the full picture. We have to talk about the difference between gross FDI and net FDI. Gross is the total amount of money coming into the country. Net is what's left after you subtract the money that investors take back out. Why does this matter? Well, it tells you how much capital is actually staying in the country and being put to work. And this right here is where things get a little tricky. Last year, net FDI was actually pretty low, under $1 billion, because a lot of money was flowing out. And this is the number people watch closely, because it's seen as the real test of long-term investor confidence. But the good news is the trend seems to be turning around. In the first half of this year, net FDI has already bounced back to $7.6 billion, which suggests that more of this new investment is starting to stick around. So, we've looked at the huge numbers, we've looked at the policies, but why is all of this so important? Let's zoom out for a second and look at the big picture.
the real-world impact of this investment boom.
First off, it's really important to understand what FDI actually is. It's often called the good kind of foreign money. And that's because it's a long-term commitment. This isn't speculative money that can just vanish overnight. No, this is patient capital. It's used to build factories, to hire people, and to bring in new technology. And that long-term stability, it creates this powerful domino effect. New factories, that means new jobs. Global companies, they bring new tech and new skills. All that foreign currency coming in strengthens the local currency, the rupee, which can even help tame inflation. And it all leads to a massive boost for manufacturing right at home.
And let's put a real number on that manufacturing boost, shall we? If you compare the decade from 2014 to 2024 with the decade before it, FDI flowing into the manufacturing sector has jumped by a whopping 69%. I mean, that is a crystal clear sign of a major structural shift.
So, you see, this isn't just about the money, not at all. We're in a time where companies everywhere are looking for what they call a China plus one strategy to make their operations less risky. This investment boom is a huge part of positioning India as a really credible alternative on the global manufacturing stage. And it all feeds into this much bigger long-term vision, Viksit Bharat, which basically translates to Developed India by the year 2047. That'll be the 100th anniversary of the country's independence. This flood of FDI is seen as the essential fuel to get there.
So, all the pieces seem to be in place, right? You've got the policies, you've got these huge commitments, and you've got some early signs that things are moving in the right direction. The ultimate question isn't just if this boom will fuel India's future, but how. Will this historic influx of cash create widespread prosperity for everyone, or will the benefits stay concentrated at the top? Will it truly transform India into a global manufacturing powerhouse? Well, that's the $135 billion question that's going to define the next chapter of its economic story.